Hi there. Welcome to the Anvil Townhomes Waitlist Application informational video. My name is Ann Chase and I am the director of the Silverton Housing Authority. I'm so glad that you are here to learn more about our exciting homeownership opportunity through the Anvil Townhomes program. This is an informational webinar covering the program basics, details about the homes, and walking through the application process. And before we begin, if you require assistance or language translations to access any of our programs or information, or if you have questions in general, please do not hesitate to contact me at 970-880-0278. You can text or call this number, or by email. Email is preferred and easier, but phone works as well. And I work in Town Hall in Silverton, and you're welcome to stop by, but scheduled appointments are recommended to ensure that I'm available. In this video, we are going to go over project details and an overview of the development, property and unit information, eligibility and qualification requirements, the waitlist process, application and instructions, and important dates and next steps. Let's dive into an overview of the development itself. So the Silverton Housing Authority is a municipal housing authority, which means we're a quasi-governmental agency. Our board is the Town Board of Trustees. I am a town employee contracted through an agreement between the two entities, and we've been working on the Anvil Townhomes development for the past 2 years. Through our community master plan process and housing studies and citizen surveys, we have heard that increasing our affordable housing options and opportunities is a top community priority. So we've designed Anvil Townhomes development to rapidly increase opportunities for folks to buy homes in Silverton that are otherwise priced out of the housing market. So here's the project team breakdown. The Housing Authority is the owner. We are responsible for the construction and selling of the homes, the construction financing and selling the homes. So over the past year, we've been awarded more than $1 million in grant funding to subsidize the cost of the construction down to more attainable sale prices. And then once these homes are built, we will be responsible for overseeing and enforcing the affordability covenants and program guidelines connected to these homes, which we will get into detail here shortly. We hired a local Colorado developer to increase our capacity because we are such a small and new organization. And this is a $4 million project, so we needed additional capacity and expertise. So we leveraged our understanding of the local needs and of our community with partners that have experience and expertise in affordable housing development. And so we hired Tributary Development. They are based in Buena Vista, and they're overseeing the budget and the construction loan details and overseeing our general contractor and builder. And then when we selected a builder for this project, we were weighing several priorities. So first, we want these homes to be really high quality for our future homeowners. And we also needed to build these homes quickly. We have such a need for below market rate homes in Silverton that we need to rapidly respond to this demand. And so with these priorities in mind, it made the most sense for this project to use a modular manufacturer. And Fading West is a factory located in Buena Vista, and they build modular homes. And modular homes are different than manufactured homes. So modular homes are built to local building code rather than federal building code, and they can't be moved once they're built. So they're on a permanent foundation, and they appreciate more like stick-built homes than a manufactured or mobile home. We're really excited about the quality of these homes, and I will share more details about them throughout this session. Before we jump into everything, I want to make sure that we're on the same page of what we mean when we talk about terms or use terms such as income qualified or income level. So every year, the federal government calculates the estimated median income of a specific area. And in our case, it's San Juan County. And so they're looking at, of all the incomes in San Juan County, what is the median or what is the middle income? And that's considered 100% area median income, also referred to as AMI. From that median, then we calculate different percentages based on how much money you make in reference to that median. So if you earn less than that, you're less than 100% AMI. If you're above that, you're more than 100% AMI. And we can break down exactly what level you're at. So, for example, if you're a single person and you make $57,120, you're exactly 80% AMI income. If you are $1 over that, you are above that cutoff of 80% AMI. You're probably 81% AMI. If you're below that 57,000, then you are considered below 80% AMI. And it's very important to note that AMI uses your gross income. So this is all of the income that you earn before any deductions like taxes or insurance. So even though you may pay taxes directly from your paycheck and that money doesn't go directly to your bank account, that is still money that you earned, and we count that in your income calculation. And then income is calculated for everyone in your household over the age of 18. Okay, now that we understand what we mean when we say income level or AMI, we can start to talk more specifically about what homes are available to you. So the Anvil Townhomes development has 9 units total. Of those 9 units, there are 2 fourplexes and then there's 1 single family home. 3 units are 2 bedrooms, 1.5 bath at 80% AMI. We have 3 units at 2 bedrooms, 1.5 bath at 100% AMI. 2 units at 3 bedroom, 2 bath, 100% AMI. And that 1 unit is a single family 3 bed, 2 bath with a garage, and that is 140% AMI. When you submit an application, you're applying for a specific unit type. So you have to meet the qualification standards of the units that you're applying for. So technically, if you earn less than 80% AMI, you could apply for every housing unit because you're below those income levels of all the units. Only if you get pre-approved for the mortgage of that sale price. So you have to be able to afford the sale price of 100% or 140% if you're applying for it. And there's a requirement about your monthly housing expenses related to your mortgage and insurance that we'll get into soon. So technically, if you're below 80%, you could qualify for the higher AMI units, so long as you meet the other requirements, which we will dive into shortly. And I did forget to mention that one of these units, one of the 3 bed, 2 bath, 100% AMI units is a visitable unit and a sensory impaired unit, which means that these are designed to accessibility standards so that someone with mobility issues can visit the unit. There isn't a bedroom downstairs, so it's not accessible, but it is visitable, so someone in a wheelchair could get into the unit. And then if you have hearing or visual or otherwise sensory impairments, there are features with the doorbell and fire alarms and etc. to be accessible for people with sensory impairment disabilities. If we receive an application from someone who has a disability, this unit will be its own waitlist drawing. So it'll be separate from the other 3 bedroom 100% AMI unit. If we don't receive any disabled applications, then we will only have 1 waitlist drawing for the 2 3 bedroom 100% AMI units. This is a timeline of the project. And so, like I said, we've been working on this for over 2 years. We've been in pre-development since late 2023, technically early 2024. And the units have been built in the factory, which is exciting. Early October is when we were doing groundbreaking and the applications open. Mid-October is when the homes are transported from Buena Vista to Silverton. And November 3rd is when applications close. That's when we go through the remedy and appeal periods for those applications. And then simultaneously, the units are still being built. They're set on the foundations. In December, on December 1st, we will have the waitlist drawing. And that is when we will determine the order of the waitlist. We expect that the first fourplex, so one of the fourplexes, will be completed by the end of December. And we will begin pre-sales for all the units once we have that wait list established. January is when that second fourplex is expected to be issued its certificate of occupancy, and then February is when the single-family home will be completed. We're really excited about the quality of these homes. So each home will have one off-street assigned parking space. They are noise insulated, and this is a really big deal because they're attached townhomes. So each home, since it's built in a factory, is its own box. We call it a box. So each home has a 16-inch wall, and in between you and your neighbor is your 16-inch wall, a 2-inch air space, and then your neighbor's 16-inch wall. We can't guarantee that they're soundproof, but we did test the sound in existing homes in URA that use the same manufacturer and unit style, and we couldn't hear each other across the unit, so that is good news. The appliances are energy efficient, and these homes are built to climate zone 7, which has high insulation ratings. And this will likely translate to lower energy bills each month than the typical home in Silverton due to the energy efficiency and the insulation. These homes are intentionally designed to be high quality. We really want these homes to be lasting homes for our community, and just because they're affordable doesn't mean that we have to cut corners on the quality. So instead we use grant funding to subsidize the cost of construction down to a more attainable sale price. Since each of these homes received significant public and private funding, they're designed to protect that investment in the project for many homeowners to come. So these properties are subject to the Silverton Affordable Housing Guidelines. This is a document that's adopted by the Silverton Housing Authority that governs the processes and uses of these homes, both for the owners and the Housing Authority. In addition to the guidelines, the homes are encumbered with affordability covenants. And this is a legal document that's attached to the property in perpetuity that governs how the property can be used and sold. And so when we think about the covenants versus the guidelines, the covenants are the rules that legally bind the owner and the property to these rules. And the guidelines are instructions for the owner and the housing authority for how to follow the rules and covenants through specific processes. That is to say, though, not to say that you don't have to follow the guidelines. The guidelines are enforceable, but they are not specifically attached to the property. And so here are some of the examples of the use restrictions on the home. So the buyer must meet the income level of the unit at the time of purchase. It's important to note that your income can change once you own the home. So you're not locked into earning a specific income during your ownership. However, when you sell the home, the next buyer needs to be at that same income level of the unit. These homes are designed to be primary residences. So these are not going to be second homes or investment homes. These are homes that you are going to live in full-time year-round. You have to occupy the home 8 months out of the year, and you cannot use this as a short-term rental. SHA, the Silverton Housing Authority, has legal authority to enforce the covenants and guidelines, which may include fees and potentially a forced sale of the home if you're not in compliance. All this is to say, though, is that we've created processes like a leave of absence and a tenant approval process so that if life circumstances change for a period of time, we can work with you. So ultimately, our goal is that you're successful in your home ownership, and we need to ensure that these homes are used as intended. And let's see what else. If you want to make capital improvements to the homes, it has to be approved by the Housing Authority if you want that credit and that value of the improvement to be reflected in the sale price when you sell the home. And then additionally, there is an HOA that governs these properties to prepare for expenses such as roof repair, sidewalk repair, any improvements that need to happen on these homes in the future. Another important restriction on these homes is that they do have an appreciation rate cap. So what this means is that every year your house appreciates, and this is true of homes in the unrestricted housing market. The unrestricted housing market, that appreciation rate is not controlled. It's controlled by forces of the market. And we're trying to keep these homes affordable to buyers in the future. And so what that means is that we have to put a appreciation cap on the homes. And so they will appreciate 1% of the value of the home, or the sale price of your home, the sale price of your home, at 1% compounding per year. So every year that your house appreciates, that's the new number that the 1% is based upon. So it is a very slow appreciation. However, you will still be making money during your home ownership period of these homes. It's just not going to be the same, like 5%, 15%, 20% crazy appreciation increases that drive the housing market. So when you resell your home, we have a maximum resale price formula that looks at what you bought the home for, how long you owned it for, and then calculate using that 1% compounding appreciation rate, plus any permitted capital improvements that you have done to the house that have been approved by the housing authority. We never guarantee that you can sell the home for the maximum resale price because, again, the future buyer has to be at that same income level and they may not be able to afford the new resale price. But we will try our best. And the whole resale procedure and the maximum resale price calculation is in the guidelines. And I encourage you to look at that to make sure that this aligns with your homeownership goals. And then I did just want to share visuals of these documents so it feels more tangible when we're talking about guidelines and covenants and restrictions. So the covenants are on the right here, and these are the legal restrictions that run with the land in perpetuity or until the housing authority releases them in the future. Then the guidelines are a living document that is adopted by the housing authority and can be amended from time to time to outline the processes and the procedures associated with the covenants, like the resale procedure, the rental procedure, the leave of absence procedure, permitted capital improvements, etc. So the guidelines are kind of the instructions to how to comply with the covenants. Okay, so let's talk about who is eligible to apply for these homes. Like we said before, you must be below or exactly equal to the income limit of the home at the time of application. And then again, right before you buy the home, but we'll get into that in a second. All of the income of your household members that are over the age of 18 is included, and that is the gross income. So that's all the income that you earn before any deductions like taxes, like insurance. If you're self-employed, you cannot deduct your business expenses from your income like you typically do for your taxes. We are looking at all of the income that comes to you into your bank account, and we count that as your income. And we'll get into what documentation we need to verify all of this shortly. Second, you need to be pre-approved for a mortgage for the sale price of the home that you're applying for. If you are not using a mortgage and you're paying cash, we need to see proof of funds of that cash in the amount of the sale price. So, with your pre-approval letter, you need to request that your lender specifically calls out what your primary interest, taxes, and insurance costs are going to be, or estimated to be. These are referred to as PITI or PITI costs. In addition to those costs, we're looking at the homeowners association fee, and all of those costs combined must be less than 35% of your monthly income. So we're not looking at utility expenses. We are just looking at primary interest, taxes, insurance, and HOA fees, and we're ensuring that these are less than 35% of your monthly income. And then finally, you need to have completed a HUD certified home buyer education course in the past 3 years, regardless of if you've owned a home in the past or even if you're a current homeowner. This is a requirement of one of our funders that we have to fulfill. However, I recommend strongly that you take that you take this course through Homes Fund or Housing Resources of Western Colorado, because when you take these courses, you're fulfilling a prerequisite to access their down payment assistance programs and their second mortgage programs, which may be the key to reducing your monthly costs, the PITI costs, to below that 35% threshold. So if you're putting more money down or you're paying less interest, you're reducing your monthly costs, and this might be the key to get you qualified for these homes. Homes Fund and Housing Resources of Western Colorado are coming to Silverton on October 18th to teach these courses. They have other times available, but those courses are in Durango or Grand Junction. And you can take a HUD certified home buyer education class online. Some are live, some are self-paced. The live classes are usually free or cheap, while the self-paced course is about $80. This info is available on our application page on the website. Okay, I forgot to mention on the last slide that you do not have to currently live in San Juan County or work in San Juan County or even be a legal citizen of the United States to apply for this program. You could be retired, unemployed, disabled, and still qualify for this program so long as you meet the other initial qualification standards. Once you meet the initial qualification standards, you earn one entry into the waitlist drawing. In addition to that one entry, you could qualify for bonus qualification standards. So that's one of these 4 definitions to earn additional entries into the waitlist drawing. Total number of entries that you can get into the waitlist drawing is 4. You cannot combine qualifications with other members of your household. So say you and your partner are both vital workforce, you cannot multiply that 3 bonus entries into 6 bonus entries. It's capped at 3. And it's capped at 1 person qualifying for the bonus standard. What else? This is in your application packet. This is in the guidelines, and it's written out in much clearer detail than this. One thing I wanted to call out is that the qualified disabled bonus entry only applies to the 3-bedroom, 2-bath, 100% AMI, visitable, sensory impaired unit. So the qualified disabled bonus does not apply to any of the other units, but you could qualify for resident of San Juan County if you live here. In order to qualify for the bonus standards, you do need to submit additional supporting information, which we will get into once we start to walk through the application process. Okay, so when you submit your application, you will be assigned an applicant ID. And I will be the one that will be reviewing your application. I will either approve or deny your application. If you're approved, you will be entered into the waitlist drawing and you will be assigned entry numbers. If I deny your application or you disagree with the number of bonus entries that I assigned you, you can appeal that decision during the appeal hearing on December 1st prior to the waitlist drawing. And I will give you all that information so that you can go through that process if needed. Hopefully you don't, but that process is available. Your applicant ID and your entry numbers will be completely anonymous. You will know what they are, but I will be the only one that knows them. And the numbers will be sorted randomly. So we've created this waitlist process to be a transparent and fair and randomized process to determine the order in which applicants will be offered the opportunity to purchase a home. So this is very important to call out. If and when you are on the wait list, you are not automatically offered a home. We then have to double check that you are pre-qualified for your mortgage. So this will be a hard pull of your credit. This will be the lender officially offering you a mortgage. And we will recalculate your income if it's been more than 120 days since the last time we calculated it. So this is very important. Please do not make any big financial decisions between the time that you apply and the time that you have the keys to your new home. Here's why. If your income changes, so say you get a bonus and you are now over that income limit, you do not qualify to buy this home anymore. On the same line, if you make big purchases, your credit score goes down, your debt goes up, your lender may disqualify you from a mortgage and then you can't buy the home. So please be very, very careful with everything related to your income, both income and expenses, from the time that you apply to the time that you have the keys to your new home. Great. Okay, let's get into the application process. So, the official application is an online form. However, you should not start this form until you've gathered all the required supporting documentation, which there's plenty of that. So please do not start that until we've completed the application checklist. And so now what we're going to do is we're literally going to walk through the application packet and process and look at what the supporting documentation is that's required. Okay, so let's get into the application process and the actual application itself. So everything that you need to submit an application is on our website on our waitlist application page. For quick reference, you can just click this link on the top banner. This will bring you to this page. Application period has opened. It will close on November 3rd. I'll review the application on November 5th. You'll have, if there's any deficiencies in your application or errors, I will let you know and I will deny your application. If everything's good to go, I'll approve your application. If I deny your application, I will outline the remedies needed to have your application be approved. So you'll have until November 13th to submit any remedies. On November 14th, I'll issue the final administrative decision. This will be the final decision of approval or denial. If you're approved, you will be entered into the waitlist drawing. If you are denied, you can then submit an appeal if you wish. I will give you appeal instructions on November 14th whenever I issue the notice of final administrative decision. So then you'll have until the 26th to submit an appeal request. Your appeal request will then be heard at the appeal hearing right before the waitlist drawing on December 1st. We will not be accepting late applications, but we will work with you during this remedy period to make sure that your application is ready to go. Everything that you need to submit this application is here on this page. If you see something that you can't find something, please let me know. The official application itself is an online form. So when you are ready to apply, you will come to this form and begin filling it out. However, like it says here, do not begin this application form unless you have read and understood the application packet, completed the application checklist, and you have all your supporting documentation ready to upload. If you require an alternative format, language, accommodations, or assistance to complete this application, please contact me hopefully prior to November 3rd so that we can get any accommodations that you need underway. So let's get into what the supporting documentation is that you need to upload. So where I would start with this whole process is the application checklist. So the application checklist is part of the actual application packet. The application checklist is a simple one-page reference guide of what you need to upload. The packet is about 100 pages long of all of the information about these properties in this program. You do need to read this, but I think maybe I'd start here and see what I need, and then use that to work through the packet. So here's the checklist. This first half is items that every applicant needs to include in their application. The second half of this page gets into specific details and required documents for different types of income earners. Let's start with what everyone needs to do. So there's a $25 non-refundable application fee. You can pay that here on our website using this link, where you'll submit your card information. Otherwise, you can pay in town hall with cash, check, or card. No matter how you pay, you need a receipt, and you'll upload that receipt to your actual application form. And this is what it looks like, but we'll get into that in a second. This is the back end of it all. Once you've done that, you need a copy of your unexpired legal ID. Again, this all needs to be digital copies to upload. You need to sign the waitlist applicant agreement. That's on page 9 of the application. So if you go to the actual waitlist application packet, you go to page 9. And this is an agreement that you make when you submit the application. This needs to be notarized. So once it's signed and notarized, you will upload it into a digital format, save that in a folder to be ready to upload to the actual online form. Mortgage pre-approval letter or proof of funds. So if you're not using a mortgage, I'll need to see that you have access to the cash to purchase the property. And let's go to section 303.6 of the guidelines. This is in your application packet to see exactly what you need for your mortgage pre-approval letter or your proof of funds. So that is down in the guidelines section. Section 303.6. I think we passed it actually. Nope. Sorry, bear with me. Here it is. Mortgage pre-approval letter. In this pre-approval letter, you'll be working with your lender to get pre-approved for a mortgage at or above the sale price of the unit that you are applying for. There's two really important things that you need to talk with your lender about when you're going through this process. First, this is a deed restricted or the deed restricted property. Technically, it's affordability covenants, but they're effectively the same sort of legal documentation attached to these properties. There's an option to purchase that the Silverton Housing Authority has, and what that is that if you go into foreclosure, the Housing Authority has the right to buy the property before the bank sells it. And so they need to be aware of and feel comfortable with the affordability covenants on these properties. If they have any issues with anything in the covenants or the option to purchase, please let me know. In addition to that, you do specifically need to call out that your pre-approval letter needs to include the estimated principal mortgage payment, interest mortgage payment, taxes, insurance, and the homeowners association fee is in the property information here in this packet. For the townhomes, it's $60 a month. Single family, it's $35 a month. But collectively, all these fees, monthly expenses, are referred to as PITI costs. And we will be checking that these costs do not exceed 35% of your gross monthly income. So, if these do exceed 35% of your gross monthly income, you may need to access down payment assistance or mortgage assistance in order to lower your monthly costs. But we will be checking this. I'd honestly recommend talking to me if you think you're close to meeting that 35 or exceeding that 35 limit prior to applying. If you're paying cash and you're not using a mortgage, I still need to see that your property taxes, insurance, and HOA fees do not exceed that 35% threshold. Again, your standard pre-approval letter does not usually include an estimated principal, interest, and taxes. So you need to make this special request of your mortgage lender. You also need a certificate of completion of a HUD certified home buyer education course dated within the past 3 years. There are no exceptions to this. It doesn't matter if you have already owned a home in your life or you currently own a home. This is a requirement of one of our funders, and so this needs to be met. I'm happy to help you find a course to complete if you have not done so already. You need a signed authorization to release information that's on page 11 of your application. This also needs to be notarized. So this and the waitlist applicant agreement need to be notarized, signed, and turned into digital copies to upload to your form. I need your most recent, let me actually go back to this. So the authorization to release information is something that we can give to your bank, your employer, anyone who has pertinent information to your income or assets in order to verify that you are qualified. I need a copy of your most recent filed federal tax return, including any schedules or attachments. This should be pretty easy. Okay. I think you've heard me mention this a couple times. We are calculating your income, and to calculate your income, we're looking at all sources of income, including any income that you earn from your assets. When we talk about assets, we're talking about cash value, things that are cash or could easily be converted to cash. So we're not looking at like your car or your snowmobile. We're looking at your money in various different accounts. So that's your savings accounts, your checking accounts, retirement, investment, mutual funds, and this also includes PayPal, Venmo, Cash App. Anywhere where you store money, we need to see that. Store or receive or send money. So for your checkings accounts, we need 6 months most recent statements from all checkings accounts. And for savings and investment, we need 2 months most recent. It's okay if it's typically investment and retirement accounts are in quarterly statements. I don't know if that'll line up with our application period actually, but a minimum of 2 months. You can include more, but at least a minimum of 2 months of the most recent statements from all asset accounts. When you're looking at these accounts, you need to know how much money you're making from them. So say your money's sitting in a savings account and there is a, 3-4% interest rate. We need to know how much money your money is making because that is considered income. And so let's go look at the application. This is the back end. Yours will look different, a little bit different than this. This is the back end of the application. This is where you'll upload all your files, applicant information. This is where we start to get into income sources. So you need to know name of your employee, like the business name, type of employment is W-2, 1099 or other, blah, blah, blah. Okay, we're not going to go into detail, but And then down here, there's other income sources. So this is usually fixed income, such as, retirement benefits or child alimony. Income from your assets. This is what we're talking about. Oh no. Okay. You will select how many types of accounts you have. If you have more than 10, you need to contact me prior to beginning this application. So for asset name, you're going to put like your checkings account at, let's say, Wells Fargo. So you'll click checkings, the current balance, and then here you're going to upload your statements and your calculated interest and dividends earned for the period that you are uploading the statements for. So if you're doing your checkings account, I need to know how much interest you've earned in the past 6 months. If you're doing your savings account, how much interest have you earned in the past 2 months? And then retirement and investment is either that 2 months or quarterly, depending on which number of statements you upload. If you have questions about this, please call me. This is very confusing, but I'm here to help you. So let's say that you've earned $1.20 in interest over the past 6 months. From your checkings account, you'll put 1.2 in interest over the past 6 months. And then what I'm going to do on the back end is automatically annualize this interest based on these statement intervals. So you need to know how much interest you're earning on each of your accounts prior to beginning this application. Or you can do it while you're submitting the application, but this will just make your life a lot easier if you do it ahead of time. Okay, this is where it gets into unique circumstances for different types of income that you receive. So if you're a wage earner and need an employment verification form, this is on page 12 of your application. This needs to be submitted completed first half by you, second half by your employer. Very important, you need to tell your employer that they need to share this form with me once it's completed to my email before November 3rd, or on November 3rd. You cannot submit this. This has to come directly from your employer because I need third-party verification. I need copies of all your W-2s and 1099s from the past 12 months. This is important with everything. I actually should have put this up here. I will go and add it up here. Please redact your social security number from all of this. Once I receive it and I find a social security number, I will redact it, but I strongly recommend redacting that prior to uploading it to this form. Our form is a secure portal, but just in case, and I don't really want to see your social security number. So please redact your social security number from everything. I need copies of your 2 most recent pay stubs from all current employers and previous employers from the past 12 months. So say you stopped working a job a couple months ago, you're not working there anymore. It doesn't really matter. I still need to see how much money you've made in the past 12 months. If you're self-employed, I need a copy of your business license, a profit and loss statement. If you're like a self-proprietor, that's a little different. Please talk to me. Moral of the story here is talk to me before you submit your application. Everyone's situation is super unique. And to make sure that you're submitting everything that applies to you and your application, please talk to me ahead of time. And then in addition to your most recent filed federal tax return, I need your 2 most recent, so the past 2 years, with all schedules and attachments. If you're on a fixed income or of income sources that aren't from a wage, I need award and benefits letter, if that's applicable. If you get rental income, I need to see where that money goes. Proof of deposits. This might not be something that you have to like double upload because it should already be reflected in your account statements up here. But just note that I will be looking for this. And then if you're applying for bonus qualification entries, If you're doing the local workforce or vital workforce, your employment verification form, which you will have already completed, will count for your bonus qualification entry supporting documentation. However, if you're applying for resident of San Juan County, I need copies of leases, your proof of rent payments, and or voter registration. Basically, I need really good proof that you have lived here for however the amount of time that you are claiming for your entries. If you're qualified disabled, you need to submit an accessibility needs assessment or reasonable accommodation. If you need an accommodation for any of this at all, this reasonable accommodation form will also apply. That's on page 15 of the application packet. And it's several pages, but you can email this to me prior to submitting the application if the reasonable accommodation is for the application itself. But if it's for the bonus qualification, you can just submit this with your application. Okay, that is the application form. That was a lot. Please call me if you have any questions. Okay, let's go over the rest of the application packet. These are linked for easy access, so you can just click on this table of contents to jump down to where you need to go. We've basically gone over these first few sections. Property information we've sort of touched on. This is where the HOA fees are. You'll need to know this again for your monthly payment. 35% threshold. This has details about, the square footage, sale price, area median income limit. Great. Then these are additional application resources and information. I strongly, strongly recommend that you work with CHAFA and a participating lender for your mortgage, sorry. All of these entities have down payment assistance and some sort of mortgage assistance. These guys may be the key to get you below that 35% of your monthly income to housing expenses threshold. This is your program guidelines. This is specific to the Anvil Townhomes. This is 300 sections. Sometimes it references sections like section 109 or 110. So these actually live in the actual guideline document. So in your application packet, I just pulled the 300 section to put it into the application packet so you didn't have to go looking for details. But the guidelines are a really big document. All the 100 sections apply mostly. However, the 300 sections takes priority. So if there's ever some provision or requirement where the 300 sections and the 100 sections are in conflict, the 300 sections takes priority. But anyways, if you're looking for it, hey, what does the rental process look like? So again, if you want to rent your house, you have to get permission from the housing authority first, and this will be under the ownership, use, and occupancy rental procedure. So these are important things that you'll be referencing and using during both the application process and when you own the home. Okay. We've touched on everything here. Please read all of this. You can do it. It's going to be worth it. This is a big deal, and you need to know what you are signing up for. Okay, I did include the Declaration of Affordability Covenants in your packet. As of right now, so it's October 5th when I'm recording this, these have not yet been finalized. This is a draft. They're not going to change too much. Our legal team is reviewing them right now. please read this. It's a dense legal document. We've gone over the basics of it, but you need to read this. So some things that you need to know, I'll just call out. You have to maintain homeowners insurance at all times. We'll be checking this every year. If you go into foreclosure, we have an option to purchase before the bank sells it. We'll be doing an annual compliance check to make sure you have the insurance and that you're using this home as intended. And like we talked about earlier, there's an appreciation cap. It's all in here. I'm not going to scroll and find all of it. But in addition to the appreciation cap, there's also a resale fee that the housing authority gets when you sell the home, which is 1.5% of that sale price. And when you close on your house, you will sign an acknowledgement of these covenants. Even if you don't acknowledge these covenants, you will still be subject to them when you own the home. So the acknowledgement is, it's not in here, but you are agreeing to these covenants when you buy this home. In addition to the housing authority covenants, the state also has covenants on these properties. This is because they granted us over $500,000 to help subsidize them. This is an agreement that's mostly between the housing authority and the state, but it runs with the land. So that means it's connected to the land and the property. This honestly has no different restrictions or requirements than the housing authority. You will notice that this document is only good for 30 years. So once that expires, that honestly means nothing to you, because the housing authority covenant will still be in, it's in perpetuity, so the housing authority covenant will still be in effect. These homes will be part of an HOA because these units are attached units, there's shared elements. An HOA will be established for insurance purposes. So in addition to your homeowner insurance, there's also HOA insurance because these are technically one building. So you have separate properties, but they're still in one building. And the HOA will cover the repairs needed for common elements such as like the roof, siding, landscaping, and utility lines. The HOA fees will be approximately $60 a month for the townhome units and $35 a month for the single-family home units. Usually the cost, and that's the cost of fiber internet is included in your HOA. That's because we got a really good 10-year deal. So each unit will be paying $35 for internet every month. Townhomes will pay $60 a month. Single family will pay $35. These are estimates, but we're expecting them to be really close to $60 or $35. But the single family is only attached to this HOA through the fiber internet services. So the single family is not going to be paying into, future roof expenses for the townhomes. This is also a draft. It will be updated here shortly as the legal team approves it and once we record it. Okay, that covers everything, hopefully. If you have further questions, please contact me. I strongly recommend that you and I sit down before you submit an application, just to make sure we know that you have everything that you need. Great, I hope this was helpful. It could have been really rambly, but I think it is helpful to hear someone talk you through it rather than drowning in all of this. I understand that this is a ton of information. This application is a really big deal, and we are here to support you through the whole thing. So congratulations, you've made it through your informational webinar, and we will be in touch. Thanks.